Why would you put a lot of time and effort into trying to beat the market, timing when you enter the market, timing when you get out of the market, and doing buys and sells when you could just get one single ETF that you're going to put money to, which is going to be incredibly successful? Now, of course, when it comes to ETFs, they're looking to replicate the S&P 500 or other indexes to provide these returns, which through consistent and constant, really putting money into these ETFs, you can see a really big return. In today's video, we're going to be looking at the Vanguard Total Stock Market Index Fund, which is the VTI. A lot of people have been looking at the VTI as of lately because of the long-term gains and they're possible. And of course, in this video, we're looking at this one powerhouse ETF that can turn $250 a month into over $2 million. That is right. If you've ever thought about being a millionaire, this is the video for you. So why buy an ETF? Now, for me, ETFs are the only way to invest. I do not choose individual stocks. When you choose individual stocks and hold just in one company, their chances are it could go up, it could go down. You could see a lot of sharp declines with owning just one stock, which is the reason why I focused on these ETFs in their entirety and covering multiple sectors and really understanding the risk mitigation factor that you're getting from these ETFs. Now, of course, the VTI is one of the best ETFs that you can choose hands down. It has a rock bottom expense ratio, meaning there's almost nothing when it comes to these fees. You get exposure to all US public companies. That is right. The VTI is exposure to all public companies, essentially covering wider markets, wider market returns. Some of its largest holding are the most successful. Looking at Microsoft, looking at Apple are two of the top fund positions, of course, in this ETF because they are two of the largest companies within the United States. Now, getting over 1 million, that is right. Our goal at this one is 1 million. And of course, looking at the portfolio, it has returned a 12% year over year over the past decade, which is kind of crazy. Right on par, a little bit actually ahead of the S&P 500, which means if you had the VOO, the VTI would have actually proven to be a little bit better. At that rate, investing $250 per month would allow you to accrue $2.3 million over 40 years, just keeping at that $250 a month. Now, of course, when you start thinking about that, being younger, 18, 20, 22, 24, just starting a job, $250 a month might be a big amount to put in there. But if you start this off right, and if you start with that amount, when you start earning more money, you get promotions, you go into different roles, you start really advancing in your career, just keeping that $250 locked in there will give you $120,000 invested over time over the 40 years. So think about that for a minute. So if you invest $120,000 over 40 years, your portfolio will be worth $2.3 million at a 12% return. That is right. You are talking about the compounding effect of interest, the eighth wonder of the world, which is kind of crazy. Now, of course, there could be ups and downs or variables from year to year, but when you look over a bigger time frame, this is really the important part of investing is number one, putting money into the market. I don't care if it's $20, $100, $250 in this scenario, $500, whatever you have to put in this market, and even breaking it down. If you think $250 a month, how can you systematically break it down to how much you have to put in a week, how much you have to put in a paycheck? So if you're saying $125 a paycheck, okay, a lot more achievable and a lot easier, especially to get that $2.3 million. Now, of course, when you look, and again, starting to think big picture, when you start looking over decades, even if the fund went down to a 10%, you are still seeing over $1 million in this portfolio with $120,000 invested, which is a pretty good return. Now, we know there is, of course, risk with owning any investment, owning any EFT, or ETF, excuse me. Really, there is risk when it comes to owning anything within the stock market. But this is the part that I really do love. Now, when you look at an index like this one as the VTI, it includes the possibility to being overexposed to one or two stocks, which can be very, very tough. When we look at some of, let's say, the growth funds, they might have 40 or 50% into technology itself, which is kind of crazy, which although that the Vanguard Total Stock Mutual Fund is not immune to big declines, the top fund investments are skewed towards the Magnificent Seven, which have rallied in the past, giving it a pretty good elevated value today. Now, these factors are risk that a fund could drop sharply if there is a pullback. Now, this is what we normally see. If we see a pullback in the market, especially in the technology sector, because a majority of these are so kind of volatile, especially if there is fear of a recession or anything like that, you could see a big downturn. This is the reason why I use what my strategy is, and it has always have been. This is why you really aim for a steady purchase in an ETF like this. That way you aren't making a huge commitment into just dumping that $120,000 in there, but through dollar cost averaging. This is the way that I smooth out the volatility. And this is the way that I've actually seen a 60% growth portfolio in my portfolio personally within the past 2.5 years, which is kind of incredible. So again, if you're thinking about your $250 a month, if you're putting in $125, let's say every single paycheck, boom, at the end of the year, you're going to have the amount. You're actually going to be over on the amount based on 26 pay periods. If you're paid every 2 weeks, you could actually be well ahead of this curve and starting to see the growth factor. So again, essentially, if you're retiring at, let's say 65 or 67, which is the full retirement age, even if you waited till 27 to do this, you would actually have, again, that $2.3 million in this portfolio just by putting $250 in there every single month, which of course, by the time you're hitting, again, 22, 24, 27, you're starting to get a little bit more and higher on the pay scale, have a little bit of experience, possibly some schooling, getting a little bit more set in kind of a career path. Usually at that point, 27, 28 is usually about the point when you start getting and really locking down a career, really focusing on, for a majority of us, on what you're going to do. So do I invest in the VTI itself? I've really considered the VTI. Now, of course, going over my portfolio, I invest in the S&P 500, which is the VOO. I invest in the VUG, which is the Vanguard Growth Fund. Now, the big thing with both of these funds, though, is there is a very high overlap, and very similar to the VOO and the VTI, there is actually a very big fund overlap in there as well, because of course the VTI does include and holds all of those stocks that are in the S&P 500, but the VTI is of course the total market, which means when it comes to mid cap, when it comes to small cap, the VTI is actually going to cover in its entirety. Now, of course, when we see volatility in the market, even when we see growth, because of the very large companies looking at Nvidia, thinking of Apple, thinking of Microsoft, because those companies have already grown exponentially to the trillions of dollars at this point, you actually have a really good positive ability to have an impact when it comes to investing because of the mid caps and the small caps that are much smaller companies, of course, that can perform exceptionally well in a very small space and do well within kind of their niche where they're dominating their market, or some of the market leaders from some of those mid cap and those small cap companies. And of course, when you start looking at mid and small, it is not, there's a lot of companies in there that I'm actually kind of surprised by when you look at some of the smaller companies that are in the United States. And again, we know they're not all going to be the huge mega cap technology companies that we see, but a lot of these are going to be kind of your day-to-day with everything that you have in America. And for me personally, I only invest in companies that are US. I do not carry any international stocks or any international ETFs at all. That is my personal preference. When I look at the growth and the stability that we have of the US markets, as much as people could kind of contradict it or contrast it in different methods, I do like the US market, and this is where I do invest everything. All right, guys, so that is going to do it for our number one powerhouse Vanguard ETF. That will turn $250 a month into over $2 million in the course of those 40 years. So, all right, again, that's going to do it for today's video. Let me know in the comments what you guys think. And as always, thank you guys for watching.